The Federal Reserve is raising interest rates again in an effort to ease inflation. The Fed increased rates by 1/4 of a percentage point today. The move comes amid increased concern over the U.S. banking system after the collapse of Silicon Valley Bank earlier this month. During the rate hike announcement, Fed Chair Jerome Powell said there was a long way to go to get inflation back down to 2%. CBS News political correspondent Caitlin Huey-Burns joins me now from the White House. Caitlin, welcome. And Wall Street, of course, didn't take too well to the Fed's rate hike today, with stocks ending sharply lower, down more than 500 points. Does the White House have anything to say about this?
Yeah, Nicole, well, this was expected news, but the White House has maintained all along that the Fed operates independently and by design so that it's not influenced by politics. But certainly the political fallout does have some implications for this White House that wants to be projecting an economy that looks strong. Remember, the president is preparing to run for re-election, as we expect, and of course wants these inflation numbers to come down. So they are saying, look, we have given the Fed all the room it needs to do whatever they need to do. They don't comment on the Fed's decisions or make any judgment about those decisions. But the White House maintained today that they believe the economy is strong. They pointed jobs numbers and other items. But Nicole, the real issue here is this acknowledgement from the Fed that inflation is still too high, that those numbers have to come down. And we've been talking to economists today who point out that the price of goods, milk, bread, carton of eggs is up 110% from what it was last year. Americans are having to spend about $372 more a month than they did at this point last year. So this is a White House that wants to project confidence in the economy. But when you look at how Americans are kind of feeling about it and what the Fed announced today, there's an acknowledgement that inflation is still too high.
The Fed chairman also weighed in on the banking crisis. Let's hear what he had to say about that.
Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound.
So some lawmakers on Capitol Hill have been very critical of Chair Powell. Senator Warren, probably the most vocal. She's called for an investigation into the Fed and says he shouldn't even be the chair. I mean, does the White House still have confidence in Chairman Powell?
Yeah, Nicole, I asked Karine Jean-Pierre, the press secretary, that very question today, given these rate hikes, and she said yes. The president has confidence in the Federal Reserve chairman. But you point out this really interesting dynamic within the Democratic Party where you see some disagreement here. You mentioned Elizabeth Warren, who has been very critical of the Fed chair and these decisions. You've had some Democrats wanting them to pause, as some expected them to do today, given the latest that happened with the banks. But you also have Democrats who are supportive of the Fed chair. I talked to Senator Mark Warner earlier this week, who said that, Powell gets it from both sides of the aisle, but that at the end of the day, what he is doing is has confidence in that kind of course of action. But this is a challenge for the Fed, given this recent banking crisis, because on one hand, they know that they need to address these inflation numbers. On the other hand, they know that there is this wider concern about the banking crisis. And Reserve Chairman Jerome Powell also said that, there may be some actions that the banks take in terms of tightening that also may have an impact on consumers.
And of course, we know that Treasury Secretary Janet Yellen was also addressing this recent collapse of Silicon Valley Bank and Signature Bank in testimony today on Capitol Hill. Here's a bit of what she had to say.
It risked contagion throughout the banking system. We invoke this exception in order to try to contain the contagion that seemed to all of us to be inherent in these uninsured depositors being wiped out or severely haircutted.
So the secretary also went on to say that the administration is still working to stabilize the banking system. What steps are they taking?
Well, the big question is, will this be extended to other banks? Will the the coverage for depositors extend beyond $250,000? That was kind of the message that was being sent a couple of weeks ago when they made that decision. And so that is the question that a lot of people have is, how you can't not do this for other banks. But the main message coming from the Treasury Secretary today and from Powell over at the Fed was that they do have confidence in the banking system, that the steps that the administration took were necessary to prevent this contagion, and they feel like they are in a good position, which was another reason why the Fed ultimately felt comfortable raising these rates. He said that they were looking at all of the economic data that was coming in as well that also contributed to that decision.
All right, Caitlin Huey-Burns at the White House for us. Thanks so much.